Welcome to Wise Beyond Bitcoin, your home for the crypto neo, news, education, and opportunities. My name is Ryan.
My name is Lucas. And welcome to another episode of Wise Beyond Bitcoin, where we have many other episodes and playlists. So if you're new to crypto, new to blockchain, of course, we've got a playlist to walk you through how to get started. We've got DeFi tutorials, how to download a Web 3.0 wallet, staking, sending, receiving, what all that means, NFTs, secret NFTs. We look for innovations in blockchain and crypto. We're all over the market. We're not sponsored. We're not promoted. So thank you for all the support that you provide. Thumbs up, subscribe, pass that knowledge around. And if you're a whale, you like to share a little bit of that krill, got the addresses down below. You know what to do. But other than that, this is just educational research. It's entertainment that we're sharing our time and energy to provide this perspective. And
Not financial advice. Right.
That's what we provide. We provide not financial advice, commercial, legal, marital, medical, any kind of advice. It's just us sharing our perspectives. I mean, no sleeves, long hair over here. Both of us sporting beards at the moment. I mean, come on, right?
Not your typical advisors, right?
No, not advisors
like
at all.
A couple bros hang out with.
But we learn together, and this is a new emerging innovative technology. And of course, our background, we've been looking at money and finance and economics before blockchain and crypto. So we love the marriage of the two. There's a nice harmonious relationship between this new technology and money and finance, which is really incredible. And the correlation is so strong. We're going to talk about that today. And of course, we've got a playlist about that.
That's right. Yeah. So this morning, turned on the old computer, took a look at the indexes and noticed that, hey, Bitcoin's back to, at the time it was 29,000. Now it's right under 28.9. So yeah, things are moving in the red. And as always, the first thing I think of is, well, there must be a sell-off going on in traditional markets, right? You pointed out one thing that I think is worth mentioning is that often in these moments, these bear markets, Bitcoin tends to outperform. I mean, it's still falling, but it's outperforming, a lot of the altcoins that we talk about that have so much emphasis in DeFi. They tend to do worse in these markets. If you look at the 24-hour change, clearly, Bitcoin's loss of 3% is not, it's higher than some, but the majority are selling off above that, right? 7, 6, 7, 5, and above 8% on some. So yeah, but generally speaking, things are moving down. There's a couple green pockets of growth here and there, but the vast majority are selling.
And we've talked about this, you're mentioning Bitcoin is kind of a flight to safety. We'll do more videos on this, but we've talked about stable coins and flight to value in this market. And we've, if you're not new to this channel, we've talked about this bear market consolidation for quite some time now, for several months. It's nothing.
Yes.
It's not a crystal ball. It's just, people who are following both the markets, not just crypto, but traditional. It's easy to see when you drop a rock in the water, if you're paying attention to where the rocks drop, you'll know that ripples are going to come out eventually. So, This is just some of those things that we expect with the Fed interest rates and more macro information. We're going to get into it here and more, but with other things happening in the world, we're expecting, I wouldn't be surprised to see Bitcoin. It's at 29,000 right now. I still wouldn't be surprised over the next several months to see it work its way, kind of crab walk down to the low 20s. And if it does that, I mean, that's
altcoins are going to be doing far worse, right?
If Bitcoin goes down 30% or close to, they're going to go down a lot more. They'll go down a lot more. So let's talk
before we hop into the main story today. I did want to mention that, one of the big themes in crypto in this last year and a half has been institutional investment, right? We're talking about the Bitcoin ETF, Bitcoin futures, various traditional financial players that are offering, you know, pathways for their clients to get into Bitcoin and to get into crypto, not to mention Michael Saylor and others that have created essentially a crypto hedge fund, or ETF them in another way. So there's been a lot of Wall Street money, to put it in other words. And we've also, in the same time period, we've also seen that that Wall Street has been pumped full of cash from the easy money policies of the Fed, right? Through stimulating during COVID, but also stimulating and increasing the money supply in years before, right? Just for various reasons, just to kind of keep the whole thing going. So we've kind of been living through an everything bubble, and crypto's blown up on top of it. So my point is that when the Fed shifts gears and starts pulling money out of the economy and raising interest rates and selling off its balance sheet and really contracting the supply of credit and reducing the liquidity in the system, why wouldn't crypto deflate right along with everything else?
Why
right?
wouldn't we be in everything deflation?
Exactly. So that, with that in mind, let's take a look at what's going on in traditional markets. And let me refresh just to make sure it's not an old, yeah, okay. So yeah, we're looking at pretty broad sell-offs. And so the question is, well, what's going on in traditional markets? And it's really pretty straightforward. Some numbers came out, some earnings were released today for a few big companies, a few major retailers. Target is at the top of the story. They really missed their earnings, and Target is now trading 20% lower today. And beyond that, Walmart was also impacted, missed earnings. Amazon, surprisingly enough, Amazon, the big internet retailer, also has underperformed in terms of what the expectation was. So in general, we're looking at consumer retailers really not having the same sales that they were expecting, right? And a lot of this is driven by the fact that inflation is not only cutting into operating expenses, right? When you're shipping all these goods, you know, around the country, you know, fuel costs are a big percentage of what your operating expenses are, and we're in a period of, you know, pretty heightened fuel prices. So retailers are facing higher costs to get their product to market, and they're also having to buy inventory at higher prices. So they're trying to pass those prices on to their consumers as well, in the form of higher retail prices. And the consumer, on the other hand, is facing the same fuel, you know, expenses, the same and higher costs on all kinds of things, food, things that are that they can't just buy less of. So there's just fewer dollars to go buy that extra item that you don't need. So discretionary consumer spending is getting pinched, and that's showing up as missed earnings and lower earnings, lower revenues for these retail companies. And it's interesting to see, but this is really just a story of inflation.
And also post-pandemic, in a market where you really look that in the economy, there isn't as much activity. There aren't as many people working. There was a lot of subsidies that went out paying people not to work or to stay home or to help prevent the spread of COVID. So there was kind of a slowdown in production in general.
Supply crunch.
Supply. So really, it's being felt, and there's still some more to feel. I feel that this is clearly the beginning. And of course, we've got some macro stories with the pandemic coming back and the war in Russia and Ukraine and sanctions and things happening at large that seem to continue to affect this supply market. But
right. So the supply crunch is not over, because, you know, a lot of the food that comes out of the Ukraine is not being planted, but the grains that should be planted, you know, in the last few weeks, this month or last month, that hasn't happened. So yeah, there's definitely, and then not to mention China, the COVID resurgence, the shutdown in China, also impacting the supply chain. But I think really though, you know, this is driven by how much money the Fed pumped into the economy in the last 18 months. I'm not talking about the checks, the $1,800 checks that people spent, you know, on rent or food or whatever. I'm talking about the trillions that they pumped into the banking system in terms of liquidity. And that found its way into where it seeped out into and just essentially undermined faith in the stability of the dollar, right? And we're looking at a world where there's just too many dollars chasing too few goods. And so you can look at it from both sides, supply demand, but it's kind of like a perfect storm. And one thing I wanted to highlight that's not in these articles, we have another one we're going to list as well that gets into some more details about various retailers and how their earnings look this year or this season. But I'd like to talk about wage stickiness, because it's not mentioned in these articles too much. But the idea here is that prices are sticky in general, and wages are notoriously sticky. So what stickiness means is that the price doesn't change quickly, right? So what happens is that inflation, and in moments of inflation, the prices of goods and services and fuel and food, they tend to go up pretty fast. But the wages people are getting paid they don't change as quickly, right? You have to wait, maybe you have to switch jobs to get a higher wage, or maybe there's if you're in a union, maybe you have to wait for the next negotiating period, or if you're everybody has their different
Well, I mean,
circumstances
if it's a government job, who knows what you have to wait for? So much of the economy are jobs where people are working for some
contracts of some way.
So, but like you said, it's common sense. Drive around, notice that your groceries, the prices go up, or you look at the gas station billboard and it shows you that the price has gone up, but your paycheck takes a long time for that to go up. And that's the idea of, that's the definition.
And so in that period of adjustment, when you're not getting the wage increase, you're paying more for all these other things. You're not a dollar you spend extra at the pump, that's not going to be a dollar. You have that, now you have less money to spend elsewhere. So this idea that inflation can also come with it sort of a stagnant economy, that's known as stagflation, right? That's another one of these buzzwords that, if you're familiar with economics, you've heard many times. But if you're not, it basically means it's a period where prices are going up, and instead of the economy expanding, it's contracting. So you see higher unemployment and reduced demand across the board, right? And the profitability of owning stocks falls. And so in general, it's a kind of a recessionary situation, but it's unique in the sense that prices are increasing, because the inflationary stories is also happening. So that's kind of like the perfect storm that central banks don't want to have to fight, right? Because it kind of they don't know which problem to attack, the price inflation problem or the unemployment problem, because the way you fight those problems, they're kind of opposed. It's a pick one scenario. You can't fight them both at the same time, because that's really the kind of the outcome we're hoping does not occur, and that that the slowdown in earnings kind of works itself out, maybe by higher wage negotiations that come quicker, or hopefully the Fed can get inflation under control. That remains to be seen. But yeah, that's sort of the big picture of where we're at and what the risks are going forward, and why we're seeing stock market and crypto markets getting hammered today.
And another effect of what we're talking about is a major transfer of wealth is taking place when certain classes are being priced out of goods, and they're being affected by that stickiness, while the money that is being created, it tends to flow into the financial sectors first in these other areas.
So there's certain classes of people that get that cash first and have their wages go up accordingly, right? Where the rest are kind of stuck in a flat position. And yeah, that's really the great inequality problem with the way that our money system is handled today, is that it might smooth out the business cycle, but it does so at the expense of a fair distribution of income.
Absolutely. Speaking of fair distribution of income in blockchain and crypto, and why this technology became so popular, didn't this Bitcoin was kind of born from the housing bubble and recognizing that there was an issue of this transfer of wealth by how certain institutions are built, and the idea is, can we build something that's more decentralized, more ethical, more equitable with the technology, with the tools that we have? It was great while we had it, but now we have a way to build something and create something bigger, right? And
that's right. And we'll see how. I'm optimistic for the future. I don't think that this bear market is any kind of death knell. Crypto's not dead. Bitcoin's not dead. It
The market
breathes
itself
in
is
and
not
out.
dead. The
Yeah, the
market's
market
not dead.
itself's
I mean,
not dead. Yeah,
our-
it's part of a cycle.
we look, that's why this is a macro. This is none of it's trading advice. We're going up and down with the market as we've been talking about these things for a while. And I would say that I do feel that we've got several months, I would say at least several months, maybe to a year of seeing this correction and contraction taking place. Could be longer, hopefully not. But at some point, the markets do become bullish again. And I don't know if you go back to the market cap for crypto, the reason why we talk so much about blockchain and crypto is once you learn about the efficiency gains, the equitable potential of this new technology and how it's revolutionizing communication, it's exciting to be a part of. When the markets are bullish again, this is a sector that has the potential for growth, exponential growth in ways that you won't find in other older legacy institutions. So it's being recognized already. You hear nations from an economics perspective, I can say it's wild times that we're living in to even think something has been created that nations are adopting as a legal tender, that banks are having meetings about their reserves. The IMF is mentioning it's
Right.
reached the minds and hearts of men and women in all classes, all over the world, regardless of,
It's changed the world, and it's not done.
No, it's just beginning. So you're not late, you're early. Welcome. It's like the beginning of the automobile. Take your time and do your own research. We'll continue to drop the links below, and you can drop some comments too. There's so much happening. We can't absorb it all. We can only take in a little bit, but if you have something that you think we should take a look at and share with others, drop it and we'll see what we can do about that.
Until next time.
Have a beautiful day. Namaste, y'all.